Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investments. I'm your host, Lewis, and I'm excited to have you join us today. We're starting off with a look at some of the latest news from the Indian stock market. Adani Power shares are in the spotlight, with InCred Equities initiating coverage on the company with an ADD rating and setting a target price of Rs649 per share. This implies an upside potential of 17.8% from its previous closing price. According to InCred, Adani Power is a pure play in India's thermal power space, with 87% of its capacity tied to long-term power purchase agreements that include a fuel cost pass-through mechanism. The company has a strong presence in the thermal power segment, and its expansion strategy includes adding 13.1 2W of capacity through brownfield projects. On the financial side, Adani Power is expected to report an 11% EBITDA CAGR over 2025-28, driven by increased plant load factor and higher power generation from the merchant segment. The company plans to spend Rs 12 to 100 billion in capital expenditure for 2025, funded via internal accruals, and aims to reduce its net debt to EBITDA ratio to 0.9x by 2030. Meanwhile, Infosys is also making headlines, with its shares potentially rallying due to the company's strong presence in the Indian sector. The company has a stable revenue mix, with a significant portion of its business coming from long-term contracts. It's worth noting that the Indian stock market has been experiencing some volatility lately, with various factors contributing to the ups and downs. As always, it's essential for investors to do their own research and consider multiple perspectives before making any investment decisions. We'll be keeping a close eye on these developments and bringing you more analysis and insights in future episodes. For now, let's take a break. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're exploring the latest developments in the world of finance and risk management. In our previous segment, we discussed the importance of diversification in investment portfolios. Now, let's shift our focus to the pharmaceutical industry and the performance of some key players. According to recent reports, the pharmaceutical sector has seen a mixed bag of results, with some companies performing well while others face challenges. For instance, the addition of new products to their portfolios has contributed to the growth of certain companies. On the other hand, others are dealing with issues related to regulatory approvals and patent expirations. In another development, an expert analysis highlights the potential of the insurance sector as a long-term investment opportunity. The industry's ability to accumulate capital over time makes it an attractive option for investors looking for stable return. However, it's essential to approach this sector with caution, considering factors such as regulatory changes and market fluctuation. Moving on to the power generation theme, the demand for electricity is driving growth in this sector. Companies investing in new facilities are likely to benefit from increased demand, while those with regulated tariffs may not see significant growth. The transmission business, particularly companies like Power Grid, is also expected to perform well due to the need for expanded capacity. As we navigate these complex markets, it's crucial to maintain a balanced perspective and consider multiple factors before making investment decisions. By staying informed and adapting to changing circumstances, investors can minimize risks and maximize returns. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We've had a fantastic discussion so far, covering a wide range of topics from market trends to investment strategies. As we wrap up today's show, I'd like to bring your attention to a recent development in the world of finance. Adani Ports and Special Economic Zone, or APSEZ, is set to raise a significant amount of Rs 5,000 crore through a 15-year non-convertible debenture issue. This move marks the company's return to the domestic bond market after over a year. The bonds are rated Crore AA, which indicates a high level of creditworthiness. Now, let's take a closer look at this development. APSEZ plans to use the proceeds from this issuance for capital expenditure, refinancing existing debt, and general corporate purposes. With a net debt-to-EBITDA ratio of 1.78x as of March 31, 2025, the company seems to be taking steps to optimize its debt structure. It's worth noting that APSEZ is India's largest private port operator, with a cargo handling capacity of 633 million metric tons. The company has a diverse portfolio of domestic and global assets, which could provide a stable foundation for growth. As always, it's essential to consider multiple perspectives when evaluating investment opportunities. While this bond issuance may offer attractive returns, it's crucial to assess the company's overall financial health, industry trends, and potential risks before making any investment decision. In conclusion, the Adani Ports and Special Economic Zone bond issuance is a significant development in the Indian bond market. As investors, it's essential to stay informed about such opportunities and evaluate them carefully. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe. And until next time, invest with caution.